Hello everyone. Today in this board meeting, I being the head of the finance team of Pay As You Go Limited company. Today I'm going to discuss about different financial instruments available in this money market and capital market in which the company can either invest in or obtain finance. Starting with the different instruments, the first instrument that I'm going to discuss about is the Australian Treasury Notes. Description. The treasury notes are based on the security discounts, which is redeemable for the short term. It has been released to assist by Australian government authorities got funding need that is traded on maturity. The major participants of the Australian treasury notes are issuers of debit and financial institutional investors. The level of risk. Talking about the level of risk, the Australian treasury notes are risk-free. Next is the original maturity. Original maturity for this is 1 year or 3 months, and the interest rates may vary. Okay, now moving on to the next instruments. Bank accepted bills can be described as the complete bill face value gets paid on maturity, having the differentiation among face value and purchase cost. The major participants for the bank accepted bills are firms, superannuation funds, business customers, normal people. Maturity of the bank accepted bills are due date of the bank bill. And the interest rate for this is after bank bill maturation, the interest rates and get reset and gets updates for the next term. Okay, moving on to the next instrument, negotiable certificates of deposits, that also named as NCDs. Talking about the description, it is considered as financial savings offered by a bank institution needs a high deposit. It provides a guarantee to the holder to be paid back their deposit along with the interest. Okay, the major participants for this negotiable certificates of deposits are companies of insurance, the pension funds, and the funds of money market. The level of risk for this is very low as well. Now, the original maturity for this is 1 year or might be less than that, and the interest rates are very high. The commercial paper is also defined as the security of the money market that is released from the large corporations to get the funds for the meeting debit obligations of the short term. The major participants that participate in commercial paper are firms, investors, and people, normal people. And the level of risk for this is very low as well. And moving to the original maturity, which is minimum 7 days and a maximum of 1 year. The interest rate for this is, for the commercial paper, is around 9.137%. Last but not the least is money market manager funds. Describing about this money market manager funds, the money market manager funds having higher risk might invest in the potential commercial paper, that is foreign currency. It can lead to having value loss in the market for volatility. The major participants that participated in the money market manager funds are CBN, Management Debit Office, and the Nigerian Deposit Insurance Corporation. And the level of risk for this is very high. High risk on lending amount for long term. And original maturity, if for this one, for the money market manager funds, are under 13 months, and the interest rates for this varies from 1.1 to 4%.